Welcome to Vector News 24. I'm John, and this is your end-of-day update for the New York Stock Exchange at 5 p.m. New York time, Thursday, April 16, 2026, as we recap today's trading, the broader economic outlook, and what's coming up tomorrow. U.S. equity markets are closing in a mixed but broadly positive range, continuing the risk-on tone that has carried over from the past several sessions. The S&P 500 and Nasdaq Composite both ended the day slightly higher, supported by another strong showing in major tech names, while the Dow Jones Industrial Average tracked near the flat line, with some industrials and financials holding back the overall move. The key takeaway is that today's session is consistent with a technical consolidation within a larger uptrend, not a fundamental breakdown. From an economic outlook perspective, the week's Producer Price Index release and related data have reinforced the narrative that input price pressures are elevated but manageable. Markets are increasingly pricing in a soft landing scenario, where inflation gradually eases without triggering a major recession. The Federal Reserve remains in focus, with several officials delivering speeches this week that emphasized a data-dependent stance. Long-term Treasury yields have stayed relatively contained, reflecting the belief that the Fed can keep rates in a range that supports growth without reigniting inflation. On the financial news front, earnings season continues to dominate sector-level moves. Major banks and several large-cap names have reported results that are shaping sentiment around net interest margins, loan growth expectations, and credit quality. So far, the tone has been cautiously optimistic, with many firms highlighting resilience in domestic demand, even amid higher-cost conditions. This is helping to keep the financial sector sell-off in check and supporting the broader equity rally. However, the tariff and trade policy environment remains a wild card, with ongoing tensions in the Middle East and potential new tariffs on key sectors like semiconductors and industrials. Looking ahead, markets will be watching the next batch of housing and labor market data, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative and, in turn, affect bond yields and equity valuations. For investors, the key message is that this is a pullback within a broader uptrend, with the S&P 500 and Nasdaq consolidating gains after a recent surge. Now let's move to European markets and the Eurozone outlook. In Europe, the DAX, FTSE 100, and other major indexes are wrapping up a session that's been broadly positive, with the Eurozone macro outlook shifting toward cautious optimism. The European Central Bank has signaled that it will remain data-dependent, with recent speeches from officials like Isabel Schnabel emphasizing that the euro area has made significant progress since the global financial and sovereign debt crises. The focus is on maintaining macro stability and convergence, which is supporting equities and keeping long-term bond yields in check. The latest data from the Eurozone show that manufacturing activity is still under pressure, but the services sector remains relatively resilient. The ECB's tone will be key to the next leg of the European move, with any hint of a dovish tilt likely to support risk assets, while a more hawkish stance could weigh on sentiment. The political backdrop in Europe, including the aftermath of the recent elections and policy debates, is also influencing the market's risk appetite, with investors watching for signs of stability and growth-friendly measures. Turning to crypto markets, Bitcoin is trading near the $74,000 mark, with the Fear and Greed Index showing readings in the extreme fear zone earlier this week, but now stabilizing. The market is clearly testing support around the mid-$74,000 to $76 range, with a strong bid stack visible in that zone on-chain. If Bitcoin can hold above that support, the technical setup favors a move back towards $76,000 or higher. A break below $72,800 could trigger a short-term drop towards $70,500, but that would likely be seen by many analysts as a buying opportunity rather than the start of a full-fledged bear market. Ethereum is trading in the mid-$2,300 range, with the broader altcoin and DeFi sectors under pressure, reflecting repositioning rather than outright capitulation. Shifting to precious metals, gold and silver are trading in a firm uptrend. Gold is trading near record high levels, with some forecasts pointing to further upside in the near term as inflation and geopolitical risks remain elevated. The US dollar-gold relationship and real rate expectations are key drivers, and the current setup suggests that gold could continue to outperform in a risk-on with hedge scenario. Silver is following a similar pattern, benefiting from both safe haven demand and renewed optimism about industrial demand, especially as the global manufacturing cycle stabilizes. The mining sector story is positive but nuanced. Gold mining equities have benefited from the strong tone in the underlying metal, with several large-cap producers trading higher and outperforming the broader market. Silver mining names have seen even stronger gains, as silver's price surge gives them extra leverage. However, base metal miners and some industrial-style resource plays are under pressure, reflecting the softer tone in broader industrial sector sentiment. Overall, the message from the crypto and precious metals markets today is that safe haven demand and risk asset positioning are both in play, but the balance is tilting more toward resilience than panic. That's consistent with the broader equity market tone we're seeing in the US and Europe. Now let's move to the outlook for April 17 and the Asian markets. Looking ahead to Friday, April 17th, the NYSE is set to open with a cautiously positive tone, reflecting the constructive close in the US and the supportive backdrop in Europe. The focus will be on the next batch of economic data, including housing and labor market reports, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative, and in turn, affect bond yields and equity valuations. The tariff and trade policy environment remains a wild card, with ongoing tensions in the Middle East and potential new tariffs on key sectors like semiconductors and industrials. For Asian markets, the Nikkei 225 and other regional indexes are expected to open in a cautiously positive range, with the tone driven by the constructive move in the US and the easing of geopolitical tensions. Japanese exporters, including automakers and electronics firms, are likely to lead the gains, supported by a relatively stable yen-dollar relationship and a backdrop of cautious monetary policy from the Bank of Japan. The Bank of Japan's message remains that it will keep yields low and support domestic growth, which is helping to cap any sharp moves in the yen and providing a broadly supportive backdrop for Japanese equities. Beyond Japan, mainland China's indexes are expected to trade in a mixed to slightly positive range, as investors balance the impact of higher oil prices with expectations for continued policy support from Beijing. Hong Kong-listed shares, especially in financials and real estate, are likely to trade with a modest gain, reflecting the supportive tone in global risk sentiment, even as higher funding costs remain a concern. The broader Asian session has been constructive, which is a positive signal for the later part of the US trading day, because strong moves in Asia often feed into European and US sessions by influencing futures and options flows. The key takeaway for traders watching the NYSE is that today's move is being supported by a global backdrop rather than just a US-only rally. If the Nikkei and other Asian indexes hold their gains into the overnight session, it increases the odds that US markets can defend their levels or even extend today's rally into the afternoon and tomorrow's open. Conversely, any sharp late-session reversal in Asia could spark more caution in New York. That's your update from Vector News 24 on Thursday, April 16th at 5 p.m. New York time, as the NYSE closes for the session. Markets are cautiously constructive, supported by a rebound in tech, a mixed but manageable economic data picture, and a relatively stable backdrop in Asia and Europe. Crypto is consolidating after a recent surge, and gold and silver are holding their defensive roles as safe haven assets. If you found this breakdown helpful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily updates. We're here to bring you clear, no-hype coverage of the stock market, economic data, financial news, crypto, and the precious metals and mining sector markets every day. Thank you for watching. Until next time, I'm John, signing off.